right? So Form 3CD, now in total there are 44 clauses over there. Right, very old, it had 32 clauses. Then after that, it had the 41 clauses. And now we have the 44 clauses. Right, so clause 4 of Form 3CD. Right, clause 4 of Form 3CD, which is regarding the whether the assessee is liable to pay any indirect taxes. Right, and any registration number, any identification number allotted for the same. So now what is the registration identification number which could be allotted also? It could be the GST registration number, what we call it as the GSTIN. Right, the GSTIN. So if I come to the RTP May 19, right, if I come to the RTP May 19, if I come to the amendments in Form 3CD, what does it say? Details as to indirect tax registration, right? So the registration number or the GST number or any other identification number allotted for the same. And in the exams, already once a question has been asked regarding clause 4 of Form 3CD, right? So if I just take you to that particular question of Form 3CD, right, just give me a moment. Okay. Right, there is a question which has been asked in your exams in the past, which is regarding Mr. Dipesh. Right, Mr. Dipesh is a renowned criminal lawyer practicing in Meerut. Right, during the previous year, he collected service tax of 25 lakh but utilized for personal use. The Commissioner of Central Excise issued a show cause notice to him as to why the tax collected by him is not deposited to the government account. Yes, he appeared before the Commissioner and stated his inability to pay the sum due to a financial crisis. The proceedings are still pending before the Commissioner. Right, so reporting requirement under clause 4 of Form 3CD. Right, then first they have given the facts of the case. Right, so in a tax audit answer, what do you need to do? Write the reporting requirement under which clause and then write down the facts of the case. Then after that, you need to write down the provisions and explanation. Right, then the provisions and explanation. What is the provision? A tax auditor is required to report under clause 4 of Form 3CD. Like you write, clause 1 of part 2 of first schedule, second schedule. So your clause 4 of Form 3CD, which requires him to mention the registration number or any other identification number, if any allotted, including the GST number, if any, right, in case if the assessee is liable to pay any indirect taxes. Right, so this is the reporting requirement. Then to report on this, what audit procedures are required to be followed, right? So this is the green part. Right, part A, up to clause 8, it is part A of Form 3CD, generally requires the auditor to give the factual details of the assessee. Thus, the auditor is primarily required to furnish the details of the registration number as provided to him by the assessee. Serial number, relevant indirect tax law which is applicable, place of business and the registration or the identification number. The auditor has to keep in mind the provisions of SA 580, written representations. Right, so he has to obtain a representation from the management that for all indirect taxes that they are liable to pay, they've obtained the registration number for the same. Right, in case the auditor is prima facie of the opinion that indirect tax law is applicable on the business or profession, but the assessee is not registered under the said law, the auditor should report the same appropriately. And then you have the conclusion. Therefore, the tax auditor of Mr. Dipesh is required to furnish the service tax, GST, whatever registration number under clause 4 of Form 3CD. Right, so did you also notice the format of the answer? It starts with the facts of the case, reporting requirements under clause 4 of Form 3CD in the given case. Then provisions and explanation. Provisions and explanation, two part. One, what is the clause? What is the reporting requirement? And then to do the reporting, what audit procedure will you perform? Right? What are the audit procedures to be performed? And then after that, you give a conclusion. Right? So facts of the case, then provisions and explanation, and then you have the conclusion. I hope you understand. Right? So clause 4. So question has been asked previously, right? May 2016. Right, the indirect tax and the registration number. Right, then after that there is an amendment in clause 19. Right, after clause 4, where is the next amendment? The next amendment is in clause 19 of Form 3CD. Right, clause 19, now in the list of weighted deductions. Now in the list of weighted deductions over there, they have also added section 32 AD. Right, section 32 AD, which is regarding the investment allowance. Right, where you get a weighted deduction. Right, so 32 AD, that is clause 19 of form 3CD. Right, that is clause 19 of form 3CD. Okay, so if I come to amounts admissible under section, what has happened over there? Now all these 32 sections were already there. Now what is added in the list is 32 AD. Right, so 32 AC, AD, AB, ABA, 33, 35, and all these scientific research from pharmaceutical industries. So now what is added over there is 32 AD, which is regarding the investment allowance. Right, where you get a weighted deduction. Right, so clause 4, there is an amendment, GST registration number, clause 19, 32 AD added over there. Then after that, directly coming to clause 29A and 29B. Right, there is clause 29 also. What is 29? Received consideration for issue of shares which exceeds the fair market value of a company in which the public are not substantially interested. Right, you have to clause 28 and 29. 28 received shares without consideration or inadequate consideration, and 29 received consideration for issue of shares which exceeds the fair market value. It says income from other sources under 56 to 7A and income from other sources under 56 to 7B. Right, that is clause 28 of form 3CD and clause 29 of form 3CD. Both of this we've seen questions in RTP and suggested. Right, in the RTP they put question on 29, exam they asked 28, and again they asked 29. Right, so clause 28 and 29. Now 29A talks about the income from other sources under 56 to 9, and 29B talks about income from other sources under 56 to 10. Right, 56 to 9 and 56 to 10. 56 to 9. Okay, I wanted to sell an asset to you. Okay, say any land, building, any immovable property, or any plant and machinery, property, plant. Right, I wanted to sell an asset to you. Okay, so you gave me an advance. Okay, that someday later I will transfer an asset to you. So you capital asset. So you gave me an advance of 30 lakh. Okay, due to some reason the sale could not take place. Okay, if I return back the advance to you, no problem. And sale was going to take place, so you gave me an advance of 30 lakh, and now say due to some reason the sale is not going to take place, and I don't even return the advance, I forfeit the advance. And a forfeiture of advance received for the transfer of a capital asset now has to be shown as income under 56 to 9 as income from other sources. Right, R raised to 10, revised 10 times before the exam. Very much a possibility of a case study coming in the exam from this one. And a forfeiture of advance received towards the transfer of a capital asset. I hope you understand what I say. Forfeiture of an advance received for the transfer of a capital asset. What is 29A? Whether any amount is to be included as income chargeable under the head income from other sources as referred to under 56 to 9. If yes, please furnish the detail, the nature of income and the amount thereof. Right, the nature of income and the amount thereof. Right, so forfeiture of advances. Right, in respect of the advances received and assets not transferred, the tax auditor should refer to the terms of the contract. Okay, so the tax auditor, you can copy down this sentence. The tax auditor should therefore obtain a certificate from the assessee. This is the audit procedure. Right, regarding all such advances received towards the transfer of the capital asset which have been forfeited during the year. Did you see that sentence? Right, what is the sentence? The tax auditor should therefore obtain a certificate from the assessee regarding all such advances received towards the transfer of the capital asset which have been forfeited during the year. I just gave you that example. You gave me an advance and the transfer could not take place. And if I do the forfeiture of that advance, then that has to be shown as income from other sources under 56 to 9. Copy down this sentence. Right, copy down this sentence. This is in the guidance note for tax audit issued by ICAI. Did everybody understand 56 to 9, income from other sources? Right? Transfer of capital asset, the advance received has been forfeited because the sale transfer has not taken place. Right? The tax auditor should therefore obtain a certificate from the assessee regarding all such advances received towards the transfer of the capital assets which have been forfeited during the year. Right? Then it says the advance might have been received during the previous year or earlier. For the purpose of this clause, the previous year in which the forfeiture which takes place is relevant. Has been copied down. Advances received towards the transfer of capital assets which have been forfeited during the year. Okay. Right. Then after that you have 29B, which is regarding 56 to 10. What is 56 to 10? Gifts received in excess of 50,000 or where it exceeds 105% of the stamp value. Again, that is to be shown as income from other sources under 56 to 10, and that comes under 29B. Right. So income from other sources, gifts received in excess of 50,000. Right. So again 29B. Whether any amount is to be included as income chargeable under the head income from other sources as referred to in clause 56 to 10. If yes, please furnish the detail, the nature of the income and the amount in rupees thereof. Right. So new clause 29B has been introduced for 56 to 10. Right. And what does it say? Gifts in excess of any sum received without consideration if it exceeds 50,000. Or the stamp duty value which exceeds 50,000 or 105% of the stamp duty value. Therefore, for any movable property where the stamp value is up to 105% of the sale consideration, no addition can be made. But if it exceeds 105%, then it is to be treated as income from other sources. Right? So 28, 56 to 7A, 29, 56 to 7B, 29A, 56 to 9 and 29B, 56 to 10. All 56 income from other sources. Right? 56.2 is all income from the other sources. Right. Then I come to clause 30. Right. What is the original clause 30? Amount borrowed on any hundi. Right. Other than by account pay check or account pay draft. But now what is the amendment over there? There are three clauses added. 30A, 30B and 30C. Right. 30A, 30B and the 30C. Right, 30C is regarding the impermissible avoidance arrangement. 30C is regarding the impermissible avoidance arrangement. Right, it is regarding the impermissible avoidance arrangement. But anyways, the applicability of this clause has been deferred till 1st of April 2019. But they have given it over there. Right, this 30C and 44, these have been deferred till 1st of April 2019, 30C, and later on I'll show you clause 44, which has also been deferred. So now looking into 30A and 30B. Okay, say I have purchased some goods from an associated enterprise outside India. I have purchased some goods from an associated enterprise outside India. Okay, the fair market value of those goods is 100 crore. But I have purchased the goods from the associated enterprise at 120 crore. I have purchased the goods from the associated enterprise at 120 crore. Okay, so now, had it not been an associated enterprise, at what price I would have purchased it? 100 crore. Okay, so right now I have made a payment outside India of 120 crore. 20 crore is the excess payment that I have made outside India. So it says whether this 20 crore is called as the primary adjustment. So it says whether there is any primary adjustment required under clause of section 92CE of the Income Tax Act, which is the transfer pricing, right? Then whether the excess money has been repatriated to India, whether the excess money has been repatriated to India, whether it has been repatriated to India within the prescribed time limit. What is the prescribed time limit? 90 days. whether the excess money has been repatriated to India within the prescribed time limit. And if it has not been repatriated to India within the prescribed time limit, then what is the imputed interest income on such money which is yet to be received from outside India? Right, that is 30A. Right, that is clause 30A. Right, so 19 we've seen, then we see 29A, 29B. Right, and now coming to 30A. Whether primary adjustment to transfer price. I told you in my example how much is the amount of the adjustment? 20 crore. Right, as referred to in subsection 1 of section 92C, CE has been made during the previous year. If yes, please furnish the detail. Under which clause of subsection 1 of section 92 CE, how much is the amount of primary adjustment? In my example, it is 20 crore. Whether the excess money available with the associate enterprise is required to be repatriated to India as per the provision. So what is the adjustment? Whether the excess money is required to be repatriated to India, whether the excess money has been repatriated within the prescribed time. What is the prescribed time? 90 days. And if no, it has not been repatriated to India, then the amount of imputed interest income on such excess money which has not been repatriated within the prescribed time. Right, so that is clause 30A regarding the primary adjustment under section 92 CE of the Income Tax Act. Right, whether there is any primary adjustment, under which clause, what is the amount of primary adjustment, then whether the excess money is required to be repatriated, then whether it has been repatriated within the prescribed time, and if not, then what is the imputed interest income. Right, and if not, then what is the imputed interest income on such excess money which has not been repatriated within the prescribed time. Right, no secondary adjustment is required if the amount of primary adjustment made in any previous year does not exceed 1 crore. So if the exam, the question is 75 lakh, 85 lakh, then this clause reporting will not be applicable. That is why I have taken an example of 20 crore. And in excess of 1 crore, only then the adjustment and the amount is required to be repatriated to India. Right, then the amount is required to be repatriated to India. Right, 30A. Then 30B is regarding the limitation on interest deduction. Right, what we've seen right now is 30A, which is regarding the primary adjustment. So you can guess what is 30A. It is regarding the primary adjustment. Right, 30B is regarding the limitation on interest deduction. Right, limitation on the interest deduction. Right, limitation on the interest deduction. Okay, so say the interest expenditure of the company for the current year is say 150 crore, just as an example. The interest expenditure of the company for the current year is 150 crore. And say their EBITDA, earnings before interest, tax, depreciation, right? Say that is 400 crore. How much is the interest expenditure? 150 crore. And how much is the EBITDA of the company? 400 crore. Okay, so let us see over here 30B. Limitation on interest deduction. Whether the assessee has incurred expenditure during the previous year by way of interest or of similar nature, again exceeding 1 crore rupees. Right, so again what does it say? Exceeding 1 crore. Even primary adjustment, what did it say? Exceeding 1 crore. Even limitation on interest deduction, if it is exceeding 1 crore. Right, then what does it say? Please furnish the following detail. Amount of expenditure by way of interest or of similar nature. In my example, how much is the amount of interest expenditure? 150 crore. Earnings before, the EBITDA. So how much is the EBITDA in my example? 400 crore. Calculate the third number and tell me. Right, amount of expenditure by way of interest or similar nature as per 1 above, which exceeds 30% of the EBITDA as per 2 above. %37.5%. Amount in rupees of expenditure, rupees mein chahiye, not in percentage. Right, of expenditure by way of interest as per 1 above, which exceeds 30% of EBITDA. How much is 30% of EBITDA? 120 crore. What is the amount of interest expenditure? 150 crore. So 150 minus 120. Right, what is 120? From where did it come? 400 into 30%. right? 400 into 30%, that gave us 120 crore. So how much it is? 30 crore. Right, which exceeds, what exceeds above one is more than 120 crore. It says that 30 crore you will have to carry forward it in the bring it forward in the further years. Why? Because there is a limitation on interest deduction. Okay, up to 30% of EBITDA you can take the interest charge in the current year. Beyond that you can carry forward. Right, you can carry forward. So details of interest expenditure brought forward as per subsection 4 of section 94B, and details of interest expenditure carried forward. Right, so brought forward and also carried forward. Why? Because there is a limitation on interest deduction. How much interest deduction is allowed in 1 year? 30% of EBITDA. Anything in excess of that you will have to carry it forward. Do you understand that? Limitation on interest deduction, right? And then after that you have 30C, which is regarding the impermissible avoidance arrangement, right? 30C, which is regarding the impermissible avoidance arrangement. But again, what is said? That the applicability of 30C has been deferred till April 1, 2019. Right? Impermissible avoidance agreement. So 30A, 30B and 30C. Is it clear to everyone? 30A, 30B and 30C. Right? This is RTP May 19 old course and RTP May 19 new course. All amendments are covered. You know, May 19 old course has more amendments. Why? Because now they don't want to update the module. And also that basic elements of PSU audit and a financial audit, compliance audit. Okay, since November 2017 it is there in the RTP only. You understand? You see, the basic elements of PSU audits, the three parties, auditor, responsible party and the intended users. Then the subject matter criteria and the subject matter information and the type of engagement, whether it is an attestation engagement or whether it is a reporting engagement. Right, so all that is already there. So RTP old course is more inclusive. So when I cover the old course RTP, obviously I've also covered the new course RTP. Okay, right, and it's all applicable for both, right? So 30A, 30B and 30C. What is 30A? Primary adjustment. 30B, limitation on interest deduction. 30C, impermissible avoidance arrangement. Then now coming to 31. Right, clause 31 is so huge, no? Because you have 31A, B, C, D, E, and under B you also have BA, BB, BC and BD. And so 31A, 31B, 31BA, 31BB, BC, BD, 31C, 31D and 31E. Full variety. Okay, right. Yes, so let us quickly see. So the amendment is mainly in BA, BB, BC, BD. Okay, pay attention, right? 31A and 31B is regarding if the assessee has accepted any loan or deposit in excess of rupees 20,000 other than by account pay check or account pay draft. So whether it has been taken by check or draft, and if it is a check or draft, then whether it is an account pay check or an account pay draft. And a loan deposit or specified sum, whether it in excess of 20,000, whether it has been accepted by other than account pay check or account pay draft. Then you have to give the name, address and PAN, the amount of loan or deposit, the amount squared off during the year, the maximum amount outstanding at any point of time during the year, right? Then whether it was accepted by check, draft or ECS, and if it was check or draft, then whether it is an account pay check or an account pay draft. Right, 31A is regarding accepting loan or deposit and 31B is regarding accepting a specified sum. 31C is regarding the repayment. And whether the repayment of the loan, deposit or the specified sum has been done during the previous year. Right, again name, address and PAN, the amount of repayment, whether it has been repaid by check, draft or ECS, and if it is check or draft, then whether it is an account pay check or an account pay draft. 31D, it says tell us the details of repayment of those loans which you had originally accepted in cash. Okay, during the previous year you have repaid a loan, but ये जो loan आपने previous year में repay किया है, ये originally आपने cash में accept किया था. So 31D, repayment of those loans which you had originally accepted in cash, and 31E, repayment of those loans which you had originally accepted by check or draft, which was not an account pay check or an account pay draft. Right? So 31AB, acceptance. Acceptance of loan, deposit or the specified sum. And 31C, repayment of all loans or deposits or specified sum. 31D, repayment of those loans which you had originally accepted in cash. And 31E, repayment of those loans which were originally accepted by check or draft, which is not an account paid check or an account paid draft. Right, now coming to BA, BB, BC and BD. Is it right? Now we will come to 31. So I'll just go to the next page. Okay, 31, BA, BB, BC and BD. Right, clause 31. I'm talking about BA, BB, BC and the BD. Right, BA, BB is regarding the receipts. Right, and BC, BD is regarding the payments. Right, what does it say? The receipts from a single person for in a single day. Right, for a single transaction or for many transactions but relating to a single event or occasion has been made in cash or has been made by check or draft, which is not an account paid check or an account paid draft, in excess of, right, receipts in excess of 2 lakh. Right, receipts in excess of 2 lakh and payments in excess of 2 lakh to a person in a day for a single transaction or many transactions relating to one event or occasion. Right, then what does it say? Name, address and PAN. What details do we want if the receipt has been in cash? Okay, so say there is an event management company. And an event management company, they have received the money from a person, say for organizing a birthday party, 4 lakh rupees in cash. So now that event management company, when their tax audit form 3CD is filled, here the details have to be given. Right, the name, address, PAN, the nature of the transaction, the amount involved and also the date of the receipt. Right, the amount involved and also the date of the receipt. If more than 2 lakh rupees have been received in cash. If more than 2 lakh rupees have been received in cash. Right, more than 2 lakh rupees have been received by check or draft, which is not an account paid check or a draft. Then name, address, PAN and the amount. Then it says we don't want the nature and the date. If it is in cash, तो फिर तो हमें nature और date भी चाहिए. If it is cash, then we want the nature of the transaction also and the amount, date of receipt also. But if it is by check or draft, which is not an account paid check or an account paid draft, then name, address, PAN and the amount. And payment. Now the event management company has received the payment, received the money. But obviously some party, some person जिनके यहाँ birthday party था, उन्होंने payment किया होगा. Right, so this was part A. I told you it's in the books of the event management company. Part B, say in the books of the company which have made the payment in their form 3CD. So again, if the payment has been made in cash, what details is required? Name, address and PAN. Right, name, address and PAN of the payee. Right, then after that the nature of the transaction. Then the amount of the payment and the date of the payment. And if it is by check or draft, then we only want name, address and PAN and the amount of the payment. Right, then no nature and date required. Right, then no nature and date required. Right, so that is BA, BB, BC and BD. Right, receipts in excess of 2 lakh and payments in excess of 2 lakh. Right, receipts in excess of 2 lakh and payments in excess of 2 lakh. Right, 31A, B, C, D, E is regarding loan or deposit accepted or repaid of more than 20,000 other than by account paid check or account paid draft. And 31BA, BB, BC, BD is regarding receipts and payment of more than 2 lakh other than by check or draft which is not an account paid check or an account paid draft. So receipts and payments in cash or receipts and payments in check or draft which is not an account paid check or an account paid draft. I hope it is clear to you. Right, 31BA, BB, right, then BC and BD. Right, so 31A, B, C, D, E, that is one story. And 31AB is what? Loan or deposit or specified sum accepted. Right, by a check, draft or ECS, and if it is a check or draft, whether it is an account paid check or an account paid draft. 31B also specified sum. Right, then coming to BA. What is BA? Particulars of each receipt in an amount exceeding the limit specified in section 269 ST. What is the limit specified? 2 lakh. In aggregate from a person in a day in respect of a single transaction or in respect of transactions relating to one event or occasion from a person during the previous year where such receipt is otherwise than by check, draft or ECS through a bank account. What detail? Name, address and PAN, nature of the transaction, the amount of receipt and the date of receipt. Right? And what does it say? Right? If it is by check, or if it is by received by check or draft, not being an account pay check or an account pay draft, then only two details, name, address and PAN and the amount of the receipt. Then nature and date is not required. Right? And BC is regarding the payments in cash. What does it say? Name, address, PAN, nature of the transaction, amount of payment and the date of payment. Right? And if it is by check draft, not being an account pay check or an account pay draft, 31BD, then name, address and PAN and the amount of payment. Right? Then the nature and date is not required. I hope it is clear. Everybody understands what I say? Right? BA, BB, BC and BD. Receipts and payments in excess of 2 lakh other than by check or draft, and if it is check or draft, other than by account pay check or account pay draft. That is receipts or payments in cash or receipts and payments by check or draft. In excess of 2 lakh rupees from a person in a single day in respect of a single transaction or multiple transactions relating to one event or occasion. Right? Receipts and payments. Right? So that is 31. Right? That's the amendment in clause 31 of form 3CD. Next amendment is in clause 36 of form 3CD. Right? Clause 36A. And a clause 36 is what? The tax on distributed profits and a dividend distribution tax. Right? What is clause 36? It is regarding the DDT, the dividend distribution tax. Right? And 36A is regarding the dividend of the closely held company. And the company is received the dividend of a closely held company as mentioned under section 2, subsection 2, clause E, 222E. Right? So that is added over there, clause 36A, dividend of a closely held company. Right? So that's the addition. Right, then after 36 directly there is the next one is clause 42. Right, next one is clause 42. Right, so if you look over here you have 31BD and then after 31BD, 31C, 31D, 31E and then directly 36A. Whether the assessee has received any amount in the nature of dividend. Right, so received any dividend in as referred to in 222E. If yes, please furnish the details. Right, so the tax auditor should obtain from the taxpayer a certificate containing a list of all the closely held companies in which the beneficial owner is carrying not less than 10% of the voting power. The tax auditor should obtain a certificate from the taxpayer giving particulars of any loans or advances received by any concern in which he has a substantial interest from any closely held company. These certificates are necessary since the tax auditor may not be able to verify these from the books of account of the taxpayer. Right, so this is all the detailing part of it. Right, but that is 36A, which is regarding the dividend from a closely held company referred to in 222E. Then you have 42, 43 and 44. Okay, now I want to enter into a transaction with a person for an amount of 3 lakh as an example. I want to enter into a transaction with a person for an amount of 3 lakh. Now the amount of the transaction is more than 2 lakh, so PAN is required. So I tell that other person, please give me your PAN. He says, I don't have PAN. If he does not have PAN, then he will give me a declaration in form 60. Okay, now I am a person who is a receiver of form 60. I have entered into a transaction with a person who has not quoted the PAN. That is why that person has given me a declaration in form 60. And the receiver of form 60 has to file form 61. Right? Receiver of form 60 is required to file form 61. So form 61, then we have form 61A and then we have the form 61B. What is 61? Receiver of form 60 is required to file form 61. Receiver of form 60. And who gives form 60? A person who does not quote the PAN. Right? 61A is regarding the specified financial transaction. So whether any specified financial transactions have been entered during the previous year, like buyback of shares or so, there is a huge list given over there. Right? And 61B is regarding the FATCA, the Foreign Account Tax Compliance Act. right? It is regarding the FATCA, right? The Foreign Account Tax Compliance Act, right? The Foreign Account Tax Compliance Act, right? The Foreign Account Tax Compliance Act, right? The Foreign Account Tax Compliance Act. So where the assessee is required to file Form 61, 61A, 61B, whether these have been furnished by the assessee or not, is what is required to be reported under Clause 42. Okay, what was the due date? What was the actual date of furnishing? Right, all these can come in the exam under MCQs. Right, they can ask multiple choice questions for these ones. Right, so where the assessee is required to furnish statements in Form 61, 61A or 61B, yes, then please furnish. Whether he is required to furnish these statements, then yes, serial number, income tax department reporting entity identification number, type of form 61, 61A, 61B, due date for furnishing, the date of furnishing if furnished, whether the form contains the information about all the transactions which are required to be reported. And if not, please furnish the details of the transactions which are not reported. Right, so any transactions which have been reported in that 61, 61A, 61B, if it has not been reported, then that the tax auditor is required to do the report. Right, so 42 is regarding 61, 61A and the 61B. Right, 61, 61A and the 61B. Right, what did I say with respect to Form 61? The tax auditor should verify whether the taxpayer has entered into any transaction where the other party was required to code the PAN. He should verify whether the taxpayer has obtained the declaration in Form 60 where the other party has not furnished the PAN. Right, so receiver of Form 60 is required to file Form 61. Right, then 61A is regarding the specified financial transactions referred to under Section 285BA of the Income Tax Act. Right, the specified financial transactions. Right, it is regarding the specified financial transactions. Right, so if I come to this guidance note issued by ICAI regarding the amendments in Form 3CD, right, it says after serial number 41, the following shall be inserted, namely 42. Right, 41, Form 61A, Form 61, and then after that 61A. Right, 61A is regarding under Section 285BA. Right, an assessee and certain other persons are required to give the details of the financial transaction. So what did I tell you? It is mainly for the specified financial transactions. And what does it say? These are the examples of the transaction. And so specified financial transaction, there is such a big list of example over there. Right, the nature and value of transaction and the class of person. Payments made in cash for purchase of bank drafts or pay orders, cash deposits aggregating to 10 lakh rupees or more, one or more time deposits of persons exceeding 10 lakh rupees, payments made to a person aggregating 1 lakh rupees or more in cash. Right, these are all these specified financial transactions. Right, a company issuing shares, a receipt from any person for an amount aggregating 10 lakh rupees or more in a financial year for acquiring shares issued by a company. Buyback of shares from any person for an amount exceeding 10 lakh rupees. Right, receipt from any person for an amount exceeding 10 lakh. Receipt from any person for sale of foreign currency, including any credit, again an amount exceeding 10 lakh rupees or more. Right, which document am I right now at? Right, which document am I right now at? Implementation guide. Right, so this you get it on the ICI website. Right, with respect to notification dated. So all the amendments in Form 3CD are discussed over here. Okay, so specified financial transactions, those are the specified financial transactions. And 61B, I told you the FATCA. Right, the Foreign Account Tax Compliance Act. Right, then you have Clause 43. Right, Clause 43 is also talking about a report. Right, Clause 43 is also talking about a report, the country by country report. Right, so where the assessee is required to file the CBCR, the country by country report, again whether the same has been filed. Right, name of ultimate parent company, the ultimate reporting entity. Right, so whether the assessee or its parent entity or the alternate reporting entity is liable to furnish the report. What is the report called as? CBCR, the country by country report, as referred to in section 286 of the Income Tax Act. Right, so everywhere now 42, 43, they are asking kids whatever forms and reports are required to be furnished, whether they have been furnished or not. If yes, then please furnish the detail. Whether the report has been furnished by the assessee or its parent entity or the alternate reporting entity, name of parent entity, name of alternate reporting entity, and the date of furnishing the report. Right, and the date of furnishing the report. Right, so that is clause 43. Right, clause 43 is regarding the CBCR, the country by country report. And then you have clause 44, which is regarding the breakup of the total expenditure, whether or not the assessee is registered under the GST law. Breakup of the total expenditure, whether or not the assessee is registered under the GST law. Right, so again, applicability of clause 44 has been deferred till 1st April 2019. One I told you 30C, which is regarding the impermissible avoidance arrangement, and second one is the clause 44. Right, breakup of the total expenditure of entities registered or not registered under GST. So all. Serial number, total amount of expenditure, expenditure in respect of entities registered under GST, and expenditure in respect of other entities registered under GST for expenditure. Right, and these are the details of the expenditure. So breakup of total expenditure and applicability of clause 44 is deferred till April 1, 2009. Right, is it clear to everyone? So can we again once make a summary of the clauses where there is an amendment? Right, clause 4, which is regarding GST registration number. Then you have clause 19, 32 AD, investment allowance. Then 29A, 56 to 9, and 29B, 56 to 10. Then 30A, primary adjustment. 30B, limitation on interest deduction. 30C, impermissible avoidance arrangement. Then 31BA, BB, BC, and BD. Right, receipts and payments in excess of 2 lakh rupees. Right, then 36A, which is regarding the dividends of a closely held company referred to in section 222E. Then 42, form 61, 61A and 61B. 43 is country by country report, and 44 is the total expenditure, the breakup of the total expenditure. I hope that is clear to everyone. Right, the breakup of the